Ladies and gentlemen, people of the internet, welcome back to yet another episode of Crypto Over Coffee. I hope you're doing well today. And if you're new here, every Saturday we break down the latest news and the hottest topics in the world of technology and cryptocurrency over a cup of delicious coffee. Now, that being said, in today's episode, I'm talking about whether the bull market is over, how to earn BTC interest, ICON 2.0, Cardano DeFi, our usual 404 Logic Not Found segment, and more. So make sure you stick around for all of those updates. And as always, let's kick it off with questions from you, the awesome folks who support Crypto Over Coffee. And of course, if you want one of your questions answered, leave them in the comments down below, tweet me at Hashoshi4, or leave them in the Hashoshi Discord, which will be linked in the description down below. And if you would be so inclined, please do subscribe to the channel, hit the bell notification button, or follow the podcast on your platform of choice so you get a heads up whenever Crypto Over Coffee episodes post on Saturdays. So let's go ahead and dive into these questions. Now, the first question of the day is from Mike Troge. Being a New Yorker, our crypto purchasing options are very limited. When do you think New York will follow with the rest of the states and get restrictions lifted? Or how will we be able to speed up the process of getting regulations changed or lifted? So this question is in regards to the notoriously strict and stringent regulations in New York City and the broader New York State area. In New York, crypto companies need to have a BIT license in order to actually operate and offer services in the crypto space. This means that it's very difficult for crypto companies to offer to New York folks, since you often see New York excluded from different crypto exchanges and platforms. Now, I don't think it's going to be easy to lift these regulations because New York has long been governed by people that are very close with some of the traditional finance space. I think that's kind of where this came from. I understand trying to protect consumers, but this is a little bit extra and doesn't really do a good job of helping innovation. Let's just put it that way. Let's put it kindly. But that being said, I think crypto companies can really help push this forward. Companies like Gemini, for example, who have gotten a lot of interaction with those regulators, Kraken as well. There's a lot of companies out there that are acquiring the BIT license and going through the process that can give feedback to the regulators in that space to tell them what works and what doesn't. I also think individual people sending letters to your representation actually does matter. I know this for a fact because I know people who have worked in Congress. If you send letters to your representation, they do understand what's being said, in general. At least they get reports. So just let them know that you're upset about it. But in this episode, maybe towards the end of the episode, I'm going to talk about a service that actually has a BIT license and makes it really easy now for New York people to move from fiat currency in their bank to using DeFi protocols like Uniswap and Aave and all sorts of other stuff. So stay tuned if you're in New York or if you're interested. Thank you for your question. The next question is from Coinoclast. How many smart contract platforms do you think can coexist? Now, I say all the time on this channel and on other people's channels when I have the chance to be on them, this crypto space is not a zero-sum game. The idea that Ethereum cannot coexist with something like Cardano or Solana or whatever, insert project here, is crazy to me. Technology generally hasn't worked that way. There's interoperability, multiple protocols and companies end up succeeding. I think this is the same. But to an extent, or to this end, not every platform is going to survive. I have a feeling that there will probably be between 7 and 15 different smart contract platforms that offer vastly different use case tailoring in terms of how their execution environment, how their network is set up. Some might be high throughput. Some might be more so about finality for really large transactions. Some might be oriented towards financial transactions. Some might be oriented towards crypto collectibles and NFTs. There's all sorts of things that you can tweak to make your protocol niche down to certain use cases. I have a feeling that's what's going to happen. And you're going to have protocols like Polkadot and Cosmos that are going to connect and enmesh all of these different smart contract enabled protocols together so that you have basically, in effect, to the end user, just one blockchain world, one crypto world, but it's composed of many different protocols. And that to me is what the future looks like. Of course, that means that not every smart contract platform will survive. And that is true. But I do think that there's going to be a lot more protocols that are successful together, especially in tandem with each other, than you might think when you start to see people battling on Twitter, like, oh, my protocol is the best, or my favorite protocol is the best, and all these other ones suck. Like the ETH killer thing, toxic and nonsensical. But by that same hand, Ethereum folks who say all these other protocols are terrible because they're not Ethereum, and they have these, compromises, also doesn't make a whole lot of sense to me either. So there's my sort of soapboxy type of answer to that question, but hopefully it helps. And then finally, from Dean Benninger, we have the third question of the day. Thank you so much for the kind compliment, by the way. I really appreciate that. The goal of this channel is to make things less about hype and more about the fundamentals and how things work. Any chance you can do a detailed explanation of MetaMask and ERC20 and why it's needed? Okay, so this is a great question. Let's try and tackle this one. MetaMask. MetaMask is essentially the bridge between traditional web browsers and, in some cases, your mobile, your mobile phone, and Web3 services, so blockchain-based services and crypto services. To interact with a decentralized application, you need to be able to sign transactions that are compatible with the Ethereum blockchain. You need to do that in the context of a front-end user interface that will likely be on your browser using a React front end, for example, which is a front-end development web application framework that you can use. A lot of people use it to build applications these days. So when you go to this website, you need to be able to, with your own wallet, with your own private key, sign transactions to interact with this dApp. So what MetaMask is just that, right? It injects into your browser essentially the necessary services and context that you need to interact with that decentralized application. So you can create a wallet within MetaMask, you can own Ether and ERC20 tokens, which we'll talk about in a second, and you can sign transactions using MetaMask and broadcast them through a node infrastructure service. There are many of them out there, but essentially your transaction gets broadcasted to the Ethereum network or to the Ethereum testnet using a node of some kind. So that part is simple. MetaMask is there to do the signing operations, to tell the decentralized application how much Ether you have. So it's that bridge that connects your traditional web browser to the world of blockchain. Now, ERC20 tokens are fungible tokens, meaning one basic attention token, which is an ERC20 token, is equal to another one BAT. They're not unique. They're not non-fungible tokens, which means each individual token in and of itself is worth the same amount, 1-to-1. That's fungibility in a nutshell. Now, ERC20 tokens are often used as utilities inside of different platforms. And so let's take the basic attention token idea. I'm a huge fan of Brave browser. If you haven't used it before, link is in the description. It's the best browser, best daily driver, better than Chrome. Basic attention token is there to sort of build the cyclical economy where if you view advertisements in your Brave browser through opt-in anonymously tracked or anonymously matched ads, you earn basic attention token. You can then, as an earner of basic attention token, pay your favorite creators with that basic attention token. So in other words, this ERC20 is sort of like money in this context. ERC20 tokens are fairly essential to a lot of cryptocurrency projects and their conceptual ideas in terms of how their networks will work, or rather how their decentralized applications will work. And so MetaMask is often used to manage ERC20 tokens, which are just essentially mapping your Ethereum address to a balance of tokens inside of a smart contract. That's really all an ERC20 token is. It's your address mapped to a balance of ERC20 tokens that allows you to then, in that smart contract, transfer your balance to somebody else. Pretty simple. So hopefully that gives you a good understanding at the base level of what this stuff is. And of course, thank you for your question. Now, folks, let's go ahead and dive into the news section. Now, just a friendly reminder, please be aware of scammers that are in the comments posing as me. I also don't have a WhatsApp. I'll never ask you to contact me for any other reason except for a giveaway win. So if the comment does not have the name highlighted like you see here on the screen, it is not me, and you can report them. So be safe out there. And in partnership with the folks at Cobo, I give away a Cobo Tablet steel seed phrase backup in every episode by picking a random comment from the YouTube video. And just for transparency, that product is only available in select regions, so if you win and you're not from a supported region, I'm just going to send you Bitcoin instead. Now, the winner of last week's giveaway for the Cobo is here on the screen, so big congratulations to you, and of course, I will be in touch to help you claim your prize. Now, In true crypto over coffee fashion, let's start out with some Bitcoin price analysis and BTC news, which, as you probably already know, was not so great this week. The big question is the bull market over? So let's discuss. Now, in last week's episode, I mentioned that spending time in the 50Ks for Bitcoin should not be surprising, and that we'll have more dips in this period of Bitcoin expansion. And we pretty much got that instantly last weekend with a big drop into the 50Ks pretty much right after I posted that video. But rumors of the Treasury Department enforcement on cryptocurrency and then subsequent proposed capital gains tax hikes in the USA seem to spur a heavy sell-off in Bitcoin and crypto at large, dropping us out of the 50K realm and into the upper 40Ks, which I know hurts to see fundamentally when you move into orders of magnitude of 10. At the time of recording, we're sitting at the cusp of 50K. We might be over 50K by the time I post, but we're not yet over that line right now. Now, what everyone wants to know is whether the bull market is now over with this big pullback, which rolled billions off the market cap. And here's my answer. The short answer is no. I really don't think the bull market's over. I've been around for bull runs of years past, with every single one of them feeling like this. There were 20, 30, even close to 40% dips in Bitcoin price in what was the middle or beginning of those bull markets in the past. And at that time, many thought the bull market was over then too. However, after those price shocks, we saw 100+% gains on Bitcoin as the market heated up again and consolidated. Of course, that sometimes took some time to happen. Sometimes it took weeks or months. But the historical data does indeed point us to that fact. I don't think it's over. If you were to ask me, we'd gone too high for too long without a big retracement, and this was about time. This move fits the pattern of previous bull markets. Now, this is not to say a bullish turn is guaranteed whatsoever, so no one can predict even with historical data. So you should be considering to yourself whether you want to take profits off the table or cap losses at low prices to buy back in. That's a personal choice, but you should always be thinking about it. Have a strategy. Long story short, I don't think the bull market is over, folks, but I think we're in the eye of the storm right now. We're just going to have to stick it out. Now, I'm absolutely stoked to announce that I've teamed up with the folks at Ledn, a one-stop shop for Bitcoin holders to earn interest on their BTC, take loans against their BTC, and more. It is essentially a financial services hub for Bitcoiners. And as the primary sponsor of Crypto Over Coffee, Ledn will help keep coffee in my cup and have the quality content flowing. And so it's a big thanks right now to their whole team for partnering up with me. On Ledn, you can earn 6.1% on your Bitcoin and 12.5% on your USDC stablecoins in Ledn savings accounts, where they are kept in secure custody with their crypto custody partner, BitGo. Ledn has also conducted a third-party accounting audit, if you will, that they call proof of reserves, so that customers can be confident that their assets are accounted for and that there's transparency behind the scenes in regards to how funds are appropriated, which is a common concern when you look at these services. And this proof of reserves audit will take place semi-annually, so you can be sure that your assets are accounted for. I mean, I could talk about all the reasons that I personally love Ledn and why I'm a user of it, but we have plenty of episodes for that. So for now, I simply encourage you to sign up with the link down below and start earning some interest on your Bitcoin or USDC during this market pullback if you're interested. So of course, like I said before, my link is in the description below and in the pinned comment. Thank you in advance, and thank you to Ledn. In other news, as Cardano gears up for the launch of the Alonzo hard fork updates that will finally bring the Goguen smart contracts to mainnet, one project that is poised to catalyze rapid initial growth in the Cardano DeFi and dApp ecosystem is OccamFi, which brings a fundraising platform and incubator, a decentralized exchange, and a decentralized autonomous organization, or DAO, that will help bring DeFi and other applications to Cardano's mainnet. Occam, like basically everything in the Cardano world, is aptly named, of course, which I can only assume is a reference to Occam's razor. And basically, that is just a philosophical problem-solving paradigm that states that the simplest explanation to a problem is usually the one that is correct, or rather, you should cut out the extra complexity that is hiding the true simple answer from you when you're approaching a problem. So, clever reference to one of the prominent English philosophers by the same name from history. Now here, Occam is looking to cut out the fluff and deliver an ecosystem of tools that will spur the growth of Cardano's decentralized application world, which is solving one of the key challenges that the project is going to face in the coming months. Now soon, presumably on OccamFi's Razor platform where they're doing fundraising, a yet unnamed order execution platform is going to be incubated as an initial decentralized offering that always trips me up. It's called an IDO, which will be held by OccamFi and the crypto swap platform Changely. So this should be an interesting one to watch. And I thought that you should at least have an understanding of what OccamFi is and have it on your radar if you didn't already, but there'll be more about this on my channel, so make sure you stay tuned. Now, next up today is a game of fact or FUD, where I take a piece of no good, very bad news and tell you whether it is fact or simply fear, uncertainty, and doubt. Now, as I mentioned in the intro, one of the presumed causes for this big crypto crash is the announcement of the Biden administration's prospective tax plan for raising capital gains taxes significantly. Of course, at face value, this would adversely affect crypto holders who accrue capital gains when they make money and then dispose of crypto assets and then incur capital gains. Now, as we see in the markets so often, both in securities and crypto, people panic very easily. And that seems to be what happened here. The fear of new tax code changes prompted probably a major sell-off as people capped gains at lower tax rates in expectation that there's going to be higher tax rates very soon. But is this tax situation actually a huge problem for crypto investors or stock traders? Is this even going to happen? Let's dig in a little more. The brass tacks of this proposal includes that it would be an effective 39.6 capital gains rate, equivalent to the income tax bracket for the top tier earners if this passes. Presumably, this would apply to those who make $1 million or more a year, and it would mean that capital gains for those people would be effectively double the current 20% rate for capital gains. Now, it is a huge stretch to assume that this type of proposal would pass the congressional maelstrom without being modified, but if passed as is, this would produce a temporary negative effect on the market as it already has just in rumor. Now, whether one agrees with this proposition or not is irrelevant, but the consensus is that this particular threat to the market sentiment is indeed fact. It is not FUD. However, one must consider that the $1 million income mark, which will basically mean only those people are affected, will likely be raised in negotiations required to pass this law, and it will affect a very small proportion of investors. So despite this being a fact, let's not blow it out of proportion, especially before it happens. Now, ladies and gentlemen, it is time for 404 Logic Not Found, and for those of you who are as of yet uninitiated in this little firecracker of a segment, I highlight notable tech-related fails or otherwise stupid moves in the world that just need to get some attention. And speaking of attention, if you want to help this video or this episode of the Crypto Over Coffee podcast get some attention from the algorithm robots, please do hit the like button, leave a comment, and get subscribed, because it tells the robots that you're enjoying the content, so others might also do so. Thank you for that in advance. And a coffee break. Today's coffee of the day is by Onyx Coffee. Again, another really great coffee. This one is decaf, actually. Now, this absence of logic has been around for a long time in the crypto space, and it's not limited to Bitcoin, but I'm using Bitcoin as an example. And it's what I like to call the Hyperzoom syndrome, where people get hyper-focused on a small window of time in the markets in regard to price or market cap, and they get super twisted up about it. They get super upset. And let's take the Bitcoin example. Right now, I'm seeing bearishness all over the place with people giving up and saying, guys, Bitcoin is down to the 40Ks. It's over. The bull market's over. Pack it up. We're done. As if this is the end of the world. Look, I get it. It hurts to see your net worth plummet in a matter of hours. It hurts me also. But zooming so far into a 1-week time scale or a 1-day time scale, even a 1-month time scale, is a surefire way to be depressed. And in fact, to look at the markets in that way is simply illogical. So let's zoom out, shall we? Not even all the way out. Let's just zoom out to the 365-day view. One single year out of the 12 years of Bitcoin's existence. 1 year ago today, Bitcoin was at approximately $5,500 US. At even $49,000 US today, we're 9x from where we were last year. Does the price drop really seem all that bad in that context? No. Now, I can, of course, understand and empathize with someone who may have bought the top and are fearful they're in a loss position. However, it's critical to understand that Bitcoin is a long game. It was never a get-rich-quick scheme. Those who experience this loss, as we all have in this space, learn a valuable lesson about volatile markets like cryptocurrency, and hopefully have looked back to the 2017 era and see that these drops are par for the course. And panic sellers tend to be the ones who end up with losses. Panic selling comes from a place of emotion, not logic. If you feel that emotion, I urge you to zoom out. to analyze the historical data, look at market conditions for what they are, and make your decisions based on fundamental beliefs and data regarding what the future holds, rather than fear. Those data-driven decisions tend to be logical, but emotional decisions tend to be, on a hyper-zoomed timeline especially, a one-way ticket to 404, logic not found. Now, for fans of ICON, I am back with my friends at ICON Plus, a public representative in the ICON ecosystem, to bring you an update on the next generation of the ICON network in ICON 2.0. Now, by the way, whenever I post a video with ICON Plus, they make a donation on both of our behalves to a rotating charity so we can contribute to amazing causes and get the word out about ICON. So if you have charity recommendations or causes that you think need to get a donation, leave them in the comments below. We're always looking to find new and amazing charities to contribute to. Recently, the ICON team launched the Sejong public testnet that gives general users the ability to test out some of the performance and network updates contained in the latest generation of the protocol, ICON 2.0. Some of these features include a new execution environment for smart contracts, which will be based on the Java programming language, which I'm stoked about. It's the language of choice for millions of engineers around the world, and it is really, really well received. I think this is a good idea. This will provide a more reliable and developer-friendly platform on which to develop applications on ICON. So smart contracts will be written in Java. Fun fact, the first language I ever learned. Now, secondly, the core software components of the ICON network nodes have been replatformed in effect to use the performant and efficient Go programming language, often referred to as Golang. This is significant because it will make the code base that makes ICON tick even easier to maintain, easier to develop on further, and of course, it will be more performant, which helps make the experience better at the layers above that core network layer. So all in all, I'm stoked to see how testing goes in public testnet, and I remain a fan of ICON and very hopeful that ICON 2.0 comes very soon. Now, in other news, a particular Ethereum wallet that I am quite fond of and mentioned in the intro with the Q&A, Dharma, just announced that you can now in all 50 states, including the infamous New York, transfer up to $25K per week from your bank account to the world of DeFi with minimal friction. So you can go from cash to crypto to Uniswap, Aave, Compound, and more very quickly. This is significant because it addresses a major point of friction or barrier to entry for DeFi and the Ethereum ecosystem and beyond, because it takes a long time in many cases to actually participate in DeFi when you're starting with fiat currency. Particularly for folks in New York where regulations are stringent, it can even be impossible to get started. So for the tech peeps out there like me that like this kind of stuff, you know my channel's all about that. Tech and fundamentals, not hype. Dharma is also launching their own software development kit, or SDK, which will be a set of tools that makes it super easy for developers of Ethereum-compatible DeFi protocols to get their own protocol integrated into Dharma's app, and of course get access to the liquidity that it will provide. So my hat goes off, well, not literally because I'm wearing a hat and too lazy to take it off, but my proverbial hat goes off to Dharma for making this experience better for people. I think this is what is going to help get the less crypto savvy folks involved in these awesome niches like DeFi. So this is amazing, and I hope more services do the same. Now, ladies and gentlemen, that is going to do it for Crypto Over Coffee this week. But if you have time to stick around, I did a 15-minute explainer about the powerful blockchain interoperability project Cosmos, which is the perfect place to start if you want to understand why Cosmos and its Atom cryptocurrency are so appealing to investors these days. But regardless of that, thank you so much for watching this episode of Crypto Over Coffee. I hope you and your family have a fantastic weekend and week ahead. And until next time, cheers.